So maybe really quick, Chris, like in 2 or 3 minutes, tell us a little bit more about you and Woods Insurance and how you ended up getting into the business.
Yeah, so I was with Wells Fargo for 10 and a half years. They took great care of me. It was a great job right out of college. I started down in Longview. They moved me up to Puyallup. They actually sent us up to Alaska. My wife and I, it was a great trip, and then came back here. Did everything from consumer lending to even managed a bank branch for a little while, and then finally moved into working directly with businesses.
Okay.
A couple years ago, after our third child was born, my wife and I were talking and decided we wanted to do something that would have a bit more impact on people's lives. So I was pretty transactional where I was at, and I just wanted to develop relationships, treat people well, and if I was able to do that successfully, then they would do business with me for a long period of time. And we really feel that taking care of people is a personal responsibility. I mean, society should do it, but I think us taking a step forward in being there for individuals is very important. So this is a way for us to really live that out when it comes to insurance, that I can be there for someone at their worst with something more than just like a casserole, that I can actually be there for them and support them and honor and deliver on promises that were made. So far it's been very rewarding, but that's why we got into this industry, a chance for me to grow a business on real principles that we believe in, taking care of people, being direct, and growing relationships.
Cool.
And it's working out well.
That's awesome. So let's zoom in a little bit more specifically on insurance, and we'll focus on home insurance today, since that's what that's specifically where I focus is on selling homes. So maybe tell us a little bit, why should somebody have a renter's or a homeowner's policy? What is the benefit to somebody to having one of those?
So there's going to be two sides to a home policy, typically, or a renter's policy. There's going to be your stuff, right? The asset and your stuff and everything that's protected, and then there's liability coverage on the other column. So a renter's policy, the stuff column isn't going to be as big. But you're still going to have things that come up. I actually think you're more likely. I have more renters claims than I do homeowners claims typically, because we'll see things that aren't your fault, right? Like you'll be third, on the bottom floor, and somebody on the top, their kids will plug the bathtub and leave it run, and then it'll flood into your walls and wreck your stuff and short out your TV. So those claims are a bit more common than I see for the homeowners. So it's very important that you carry that. I mean, sometimes 10, 20 grand doesn't sound like much, but it only takes a little bit of smoke damage to ruin your entire wardrobe. And then when you have to go buy everything new and it's just not on sale, it starts to stack up pretty quickly.
Yeah.
And then the liability portion is the next piece. If you're looking at a renter's policy, the idea that if somebody were to sue you, that you would have some recourse, then that's where that personal liability comes into play. Anything that you could be held negligent on, or somebody's going to sue you for negligence, then it's going to fall on that policy instead. You don't have to be a millionaire to be sued like one. So if you're confident and you look through the paper and you're like, you know what, I'm pretty sure that no one's ever going to sue me because I don't think they're going to get anything. Maybe it doesn't make sense, but you don't want the worst day or the worst thing that ever happened to you because of a small accident or something that you only had limited control over, to be something that makes your life awful, or that totally changes everything you do. So going from okay to not okay, we just want to make sure that people are well protected. As far as homeowners insurance, there's a big part, right, protecting all of your stuff. But that second part, the liability portion, a lot of people don't realize what all is at risk. So when it comes to, yes, your home is protected, but in the state of Washington, you do need to protect the equity in your home. And if someone files a judgment against you or files a suit against you because of an area that you were negligent, that can certainly go on your homeowner's insurance, right? So in many cases, that's going to be the first line of defense. Otherwise, if the judgment's placed, you could have worked your entire life to build up, $500,000 in equity just to have it disappear in the course of a lawsuit. So really protecting that. And also it helps protect the income for you. So, in this state, there is a potential for wage garnishment. So making sure that you're protected for that against that as well. So really, insurance is designed to be the castle walls, and everything you work your entire life for, that you keep in the treasure, all the time that you've put in, all the effort, and everything that you have amassed is in the middle of that. And if those walls are short and a litigating attorney is just staring at all the potential, you're at risk. And there's a lot more that you're going to have to protect yourself versus building a larger foundation in a good solid wall of insurance between other people and your stuff.
Okay. Thanks, Chris. So maybe dive a little bit deeper into specifically the home insurance, the general policy, what most people get. What does that general policy cover for a homeowner?
So general policy, it used to be all insurance came from basically one policy that was set out, right? And then there was legal precedence that's set on that policy, and then people slowly start to change it over time. So first policies that are set out for the home are going to be the dwelling protection, right? How much is it going to be to replace this structure, like the home, everything that's in it? The next step is going to be, separate structures, like attached structures, and then it'll be personal property. Then it'll go into additional coverages like loss of use, and a few others. But each one of those is going to be a percentage, and always historically has been a percentage of the dwelling protection. Mm-hmm. So if in those you see differences between companies. So the dwelling protection might be set at $300,000, and then they might say 10% of that is for separate structures, which would be $10,000, and then 50% of coverage A, or the dwelling, would be for personal content, so $150,000. So it would all be structured down. What's changed now is the ability to really scale in a lot of those. Some companies have that ability and some don't. Some just offer a package and here's what it is. It's included with these coverages. You can add to it, but taking away doesn't change anything because they're built in essentially as minimums. And some companies now do have the ability that if you were to diminish some of those coverages, you can actually save a little bit, which helps. So, and that's going to come into play if you don't have a detached structure or an additional garage. Maybe you don't need to pay for it. Maybe you have maybe like in Seattle, you could have $750,000 home. That doesn't mean you need $350,000 or $400,000 in personal contents. So we want to make sure that the coverage is scaled correctly for you.
So you have the availability to scale coverage then? Yeah,
that's new for us, even just within the last year. So the industry keeps changing and a lot of research on that, but for us, that's a new feature that we're able to really, if we reduce a coverage, actually show a savings to the customer. So
very cool. So what's typically not covered? So we know kind of what's covered. What's typically not covered under the general homeowners policy? Biggest
issues that I run into, and where people are the most angry with me, are anything that's damage over time. So if you have a tree that's just creeping up under the roof, just a little bit, but it causes water damage over a period of time and it creates dry rot, not an insurance claim. If you have, a slow leak in your roof and you haven't been up there in a couple of years and it slowly creates that dry rot mess, not covered by insurance. Also, anything that's going to be considered maintenance. It's a big issue in Seattle where homes will connect to the sewer lines or to the water lines, and trees and such will mess those up. Those aren't insurance claims. If they cause damage into the home, right, we're going to take care of that damage, but the fixing of that pipe can be pretty expensive. So a lot of times the city puts that on the homeowner. So those can be up to, and sometimes $40,000 to dig up the street and fix a connection. So those are a couple that aren't covered. Your typical homeowner's policy is not going to have earthquake coverage, and it's not going to have flood coverage. So getting those, and earth movement is typically built in there. So it's kind of an interesting scenario. If there was an earthquake and your home shifted, right?
Yeah.
Not covered. But if then it burned down because the gas line burst, covered. So, right, like it's kind of interesting how it plays out, but those are the biggest gaps that people will talk about in their coverage.
Okay, so if somebody wanted to get earthquake insurance, flood insurance, are those things you have to do at the beginning, or can they add those on later? And then where would they get those if they wanted to add them in?
Yeah, you can go. There's a few companies that will offer the earthquake insurance. Sometimes, and you can always add it. Sometimes an individual insurance agent will sell those coverages. Sometimes they won't. So sometimes they do have to go and talk to a different agent. But yeah, you can get those at any time. You can cancel them. Well, earthquake you can get and cancel really at any time. Flood, sometimes you're going to be deemed to be in a flood zone, and you're going to be required to have it through the lending process. If that's the case, it gets a little bit more complicated. We're going to look at a few different scenarios as to how to best get that coverage for you. But that one, if you're in a flood zone, you're probably going to be deemed. You're going to have it throughout the loan process. Yeah, and you're going to it's going to require.
Okay, cool. So then, as far as a renter's policy and a homeowner's policy, if somebody that hasn't bought a home before, they're probably familiar with the renter's policy. How do those two policies differ?
There's a lot of ins and outs when it comes to how that house and that home policy is going to be input into place. Some parts are very similar. They're both going to have the liability protection, and they're both going to have your stuff, right? So the home protection. Some of the policies that are out there now, as you're kind of looking and comparing those, in order to cut prices in a very price sensitive market, they've reduced coverages in ways that most people wouldn't typically understand.
Okay.
So a normal home claim, like if there's a fire in your home, the way that it's going to be settled is they're going to look at your home and they say, all right, we're going to pay you. The first payment that you're going to get is a depreciated value, right? Your roof is 10 years old. It's not worth, so maybe it was $40,000 to put on. We're going to give you $20,000 for that. Yeah. And the same with everything else in your home and all of your contents. The first payout typically is that depreciated amount. Mm-hmm. And then you have to go through and justify essentially that larger value for the replacement. Mm-hmm. There's policies that exist out there now with different carriers that parts of the home will not be, they'll say, it's a replacement cost policy, but then parts of the home will not be replacement. Some of them will say, all right, your home's new, but if we're not going to pay for your new roof, even if it's a total loss. We're going to give you the value of what it was at the time of loss, or carpets, small things, or the small line items within the policy that once laid out are very frustrating at the time of loss.
Got it.
So I would say that most renters policies pretty consistent. Like there's not big differences in renters policies, like from company to company. It's a pretty standard policy. When it comes to homeowners policies, what's covered, how they calculate that replacement cost, whether it's going to be, what you're actually, the money you're going to get if you were to make a claim, that can vary a lot.
Okay, got it. That's helpful. So then, as far as cost goes, what are we looking at if someone's going to be getting a homeowner's policy? What are the costs going to be as far as prices? I know there's probably a range. Can you kind of help us understand what that range looks like and what you get for those different ranges?
It is really tough to start to look at exactly what the range is going to be. Mm-hmm. You can see from $300 to $2,000 on any time, and even similar homes.
Is that an annual? Yeah,
as an annual rate. Mm-hmm. So some of the factors really start to come into play, right? Is it a home that was built maybe in the 90s and has plastic pipes and is about to just pop at any minute, right? Like we know that we have a higher number of percentage of claims on those homes. So factors like the age of the home that you have, an individual person's age, someone who, typically someone who's been a homeowner for a long time, typically knows home maintenance is going to end up having less claims, whether the property has had claims before, what type of zip code it's located in, the fire protection. A lot of people gets into it, but how close are you to a fire department? If they're going to respond to you, is it within a mile? Is it 3 miles? That can make a big difference when it comes to your homeowner's insurance rates. And even now, they're starting to bring in driving records. They're starting to bring in the credit score has been a factor for a while, but the credit score can play a factor in that and any previous claims. So I would love to be like, oh yeah, if you're going to pay this much, here's how much it's going to be. But it's such a big difference. I think really tough to say. So
okay, so price, it sounds like price can vary pretty dramatically, not just from company to company, but based on where your house is located, how old it is, things like that.
Right. And different agents will combat that differently, right? If we start to think, all right, all home policies should be $50 a month, right? That's a good number that we're going to stick with. Then when you start to provide this information to insurance agents and you're in a lender or a real estate agent says, hey, we need to kind of get into this box, they're more likely to not necessarily walk through what the customer should have in those scenarios, but here's how we can get a policy that will meet the guidelines of that. So comparing even like policy to policy, you can have two policies on the same home with dramatically different coverages and thus dramatically different prices. So it's just there's not really a great way to gauge it.
Okay, that makes sense. So you mentioned a couple things, like you mentioned being close to a fire department or the age of a house. Are there other things that have big effects on your homeowner's insurance policy and how much it costs? Are there other factors there?
Yeah, the separate structures typically, like how much are you going to need for a separate? If you've got some acreage and you have a detached structure and it's a $50,000 structure, that's one of the bigger gaps that we tend to see. A standard homeowner's policy might throw $20,000 or $30,000 worth of coverage at what could be a $50,000 or $100,000 structure on the property. So that's one where we typically see some variance. So making sure that your coverages are right for you in each one of those categories, that's going to be one of the best ways. Other factors in this market are going to be kind of tough, right? Like I could say, yeah, if you could get a home you should totally get a home that's, probably good school district, right? Next to a fire department, right? Like all of those factors, yeah, they're going to have big, nice area, like quick response. Those are going to be good factors. I think doing a little bit of research on homes is important too, like finding out their loss claims. Typically, most insurance agents can pull a loss report on an address to see if there were previous claims that were made there. If there's been 4 water claims and you're walking into that, hopefully that's something that you should know and then tell the inspector about to look for. So those are some of the things that you would normally want to look at. But past that, a lot of this, like especially in this market, it's going to be finding the right property first, and then you won't know the value of your coverage until you make a claim.
So what things should people be looking for? Like what, aside from price, what value in a policy should someone be looking for?
Not so much the policy, but who they're working with.
Okay.
Because you want a situation where the agent can go to bat for you, right? If it's working with an adjuster, someone that is not going to just take your information, hand it off to the claims team and say, you're going to have to work it out and follow their steps. You want someone that's, we just had a customer who had a total loss, and like, it's a very difficult process sitting down with them, like walking through, here's what's going to happen. Having someone that's going to be there for you and not make you feel like, all right, here's how we're not going to give you everything that everything is going to take to make your life whole again. I think there's a naturally combative relationship between someone who just had a loss and then the person who's going to be kind of giving them the money. That's the adjuster's role, is kind of sitting down, all right, here's what we believe you should get. My role as the agent and working with the clients to make sure, I want to make sure you guys are happy, right? Like, I want to make sure that you are taken care of, that you guys have food to eat, that do you need a place to stay? Do you know the process? Are you comfortable with who you're working with? Are you comfortable with what they're saying here? Is this going to be a good experience? Because hopefully, if it's going to be a bad loss for you and it's a really tough time, at the end of it, I want it to be like a picture that I can put on the wall. Like, here's how awful it was and here's how great it ended. If if you're shopping based on price, the model that is a price model, I think you can do very good price and deliver amazing service. So finding that is crucial. If you only look for the price and you don't really look for the service, the moment you need it most is the moment that it will let you down. So that's what they should be looking for. Who am I going to talk to if something goes wrong? And if that person says, I'm going to send you to an 800 number, or I'm going to, I don't know, or it's going to be me, but I'm really busy. Like, we just want to make sure that value, that you know that you're cared for and that they're going to proactively work to help you.
Okay, great. Nice. So then let's transition here a little bit to as far as what people are looking for and should be looking for. What things do people typically overlook when they get their policy?
Not only the coverages that they have is the limits, like what limits make sense, but again, those types of payouts, right? I think there's ways to reduce the costs on a policy that most people would assume, or might assume, as being unreasonable. And I very much doubt that most people, although they should, are sitting back and reading their policy line by line. So getting a good sense for, all right, is this understanding replacement cost versus actual cash value?
Yeah.
Some of the policies will list out areas that are not replacement cost. And we see it all, I understand most people are say, oh, I would never do that, until they realize that one small section of their policy is that depreciated value, and then they're unhappy. So making sure that it is full replacement cost across the board. Making sure you're comfortable with the estimate that they use to rebuild your home. Sometimes, different company may reduce that. You will get a replacement cost coverage on a home, but there's a co-insurance requirement for most policies where you have to be at 80. You have to be insured for more than 80% of the actual reconstruction cost of the home. So if you are beneath that and it says, oh, it's guaranteed, or replacement cost, or it just says we have 150% replacement cost, they can give you significantly less to rebuild your home because you weren't carrying the proper limits.
Okay.
Totally legal, totally out there. So understanding the ways that people run estimates, verifying that the estimates are correct for your home, right? If in order to drive the price down, the estimates that they did were just like on a standard cookie cutter home, like that was, across the board, there was no custom work and anything, and then you walk in and it's like full granite, like ridiculously large, master bathroom with walk-in closets and a lot of ornate trim work. That's going to be significant. To get back to that home is going to be more than maybe just a cookie cutter home. So making sure that they are using correct information when they're building the estimates for your home are going to be crucial, and understanding even a little bit of that process.
So you mentioned different limits and things like that. How do you go about advising a client, just in general, on deductibles, limits, coverages that they should carry? How do you go about that process?
So I usually walk through, I've got a form that I walk through. I like to, a couple of basic factors is how much equity you're going to have in the home, and income, and personal assets. That's going to really start to determine what liability limit you should carry. I think a lot of people really don't realize how cheap it is to increase that limit. Like, very inexpensive, only can be like a few dollars a year difference to go from $300,000 to $1 million in liability protection on a home. Very reasonable. So making sure that that limit is set in case there's something that happens financially. As far as the reconstruction costs on the home, we talk about each one of those, talk about the home in detail. If your agent just kind of doesn't ask you anything about the home, especially if it's sometimes with a new listing, it's actually pretty easy because there's a lot of pictures that we can see, then that's okay. If it's going to be something that there's not a lot of recent pictures regarding your home and they don't really know what it looks like and they don't ask questions, then there's a pretty big risk that you could have things that are not correctly covered through there.
Okay.
Making sure those separate structures are covered well. And then the last is collections and such, making sure that you anything that, if something is valued more as a full collection than they would be individual items, that's typically going to be something we would want to talk about. A lot of jewelry, and the theft, the way the theft works is there has to be signs of forced entry, right? So if you have people over and then all of a sudden some jewelry's gone, it's not theft, right? Because they didn't break in, it's just missing and mysterious disappearance. The only way to protect against that is like a specific jewelry floater. So you can list, all right, this ring, you can set it as a separate deductible if you want, but then if it does walk out the door, you're going to be covered. You have an actual path to get the ring back or actually to replace it. So jewelry's that way, firearms are that way.
So people would need an actual separate floater attached to the policy to cover those specific things if they wanted to make sure that they would be covered.
Most policies for guns, collections, silver, gold, like they're going to have a cap, a per item cap and a total loss cap. Same with like computers. If you do a lot of really nice computers, you probably don't have enough coverage on your home policy. So your jewelry could cap out at $1,000 per item. So if there's a $5,000 wedding ring and you only have $1,000 for the replacement on that item, that's going to be all you get unless there's that floater. If they're going to look for an appraisal on that, those are pretty reasonable. But just make sure that you go to a reputable jeweler. Some jewelers will actually continue to do those appraisal updates about every 5 years without a significant fee, and that's probably what you're going to look for there.
Okay, so as far as deductibles, how do you determine whether you want a low deductible, high deductible? Is that a personal thing? How do you tackle that?
We're seeing a wide range in deductibles between policies. It's becoming more and more popular to see a percentage of the home value as being a deductible. Okay. So like if you have a $500,000 home, you could be on a 1% deductible, which would be $5,000. So I think it's good in some cases that your homeowner's deductible is a little bit higher. You don't want to make smaller claims consistently, and that kind of we do typically see a good number of years between homeowners claims, so it makes sense to save some of that money over time. But making sure that you're comfortable with it. If it's right now, if we're gonna have a windstorm and a tree goes into your home, are you comfortable paying out $5,000? Like basically paying for most of the, it could turn out to be most of the claim yourself, or do you feel comfortable with $1,000? I never recommend less than $1,000. Okay. In this day and age, you're probably just not going to call me. If it's a few $100 fix, you're going to probably do it yourself and start to those larger claims you're going to end up making for over that. And make sure that you have a conversation. This is one of the reasons I think it's very important to have an agent. You can actually, so the client can call me and we can talk about what's going to make sense regarding that claim. If you don't have an agent, you're going to call the claims number. They're going to say you should make the claim. Then we'll figure out if we're going to pay it out or not. Yeah. And it still counts as making a claim. So it'll be on the record. It'll show that a claim was filed against your home. It's going to show on their insurance reports for you moving forward, and it can actually make your life a bit more difficult. So having that conversation, I think it's going to be a personal choice. At least $1,000, more if you're comfortable with it, and starting to understand that you're going to self-insure some of the small stuff. Some of the policies now have diminishing deductibles where you can set it at a higher level and it will go down every single year. Okay. Those I think always make sense to go a little bit higher. Okay,
great. So then, as far as claims, you're talking about claims. What are the most common claims that you see?
It's been just these last few months. It's been small fires, right? And they do a lot more damage than people tend to think. So it's not the actual property. The building doesn't burn all the way down. It's smoke is destructive and it gets into everything. And you don't want to move back into your home, 6 months later, and then next summer it smells like a barbecue because they didn't properly clean out all the smoke, right? Like, so the time it takes to properly clean that and to go through that is crucial. I think we see, and it's a wide range, a lot of electrical reasons. We see small, sometimes kitchen fires. We see, we saw one that was a gas leak, dryers. I mean, yeah, just it can be a wide range, but that's probably one of the biggest and the most destructive. I really think it's also a large gap that people have, because it can take a few months right now to probably 6+ months to fix something that's going to be like that. So making sure that most homeowners policies have a loss of use built into it, and that's going to be what pays you to live someplace else. All right, like I can't use my home, I get to be, where are we going to put you up? Like that's going to be, do you want to be in a hotel because that's all that your policy can cover and afford, or do you want to be, with you? For me and my family, it'll be us, 3 kids. We are not going to do well in a hotel room for 6 months.
Yeah.
It should be a policy where they're looking for comparable living arrangements. So renting a home short term, furnishing it, making sure that we are covered for that period of time, that can be expensive very quickly, and making sure that your policy has enough to cover that is important.
Okay. So how are some ways, you mentioned a few kind of common claims, how can some of those be avoided? Are there ways to avoid some of those claims that you've seen? Things that could have stopped them before they even were needed to be made?
Most of what we see is it will fall into some of the deferred maintenance. So it's going to be not really, once a year, taking a look at your home the same way an inspector would, like going around, identifying problems, just trying to find those damage over time causes, making sure your smoke detectors are, readily available, fire extinguishers in homes. Big believer in that. Make sure that you know where they are. I think have one upstairs, have one downstairs. Usually you think right next to the kitchen. Well, if the kitchen's on fire, and the area where the extinguisher is on fire, having another one you can get to pretty easily is going to be important. And then things like the cleaning out the lint in the dryers, right? Replacing filters for a lot of even for furnaces. Things like that that'll make your home run well. A well-maintained home has fewer claims. So, annual maintenance.
Great. So you mentioned possessions. Sometimes things get damaged, stolen. How can somebody go about effectively documenting all those? It can be kind of a pain to write down each and everything. Are there ways that you advise clients to effectively, efficiently document what they have in the house?
Yeah, so you've got a smartphone, go into a room and start the slow pan of a video. I think it's a very easy way to do it. Open up your kitchen cabinets, right? And it doesn't have to be like everything laid out, right? What you want to give the adjuster is a good sense for what you have. So panning through your closets, panning through your drawers, it's going to give them a good feel for the types of things that you have, the quality of the things you have, how much of it you have. That way you don't have to make an inventory. Part of the adjuster's job is to go through and document every item and verify it.
Yep.
It is going to be so much better if you can just hand over a video of your home than having to sit down, think about, and acknowledge each item that you're never going to have again. So hand that full video over. The adjuster is going to write down everything that they see in that video, and then you just have to verify. Right? And most of that is going to be done, as opposed to you having to really paint. I was with a gal recently, and it was heartbreaking for her to have to look at, or even think about the items that have very much personal meaning, and she has to think about it, write it down, right, and remember everything that was involved with acquiring that. That's the last thing you want to do in the moment something happens. So take a video, hand it over.
That's easy.
Yeah.
So then, what should somebody, you mentioned this a little bit earlier, what should somebody be looking for in the insurance agent that they choose to represent them?
You want to make sure that you get a good sense. They need to provide you with options along with the pricing, right? So I think having someone who's looking out for you and is helping you understand why the individual limits are important are going to be crucial. And having a good sense that if something goes wrong, I trust this person to actually go to bat for me. I trust this person to be there for me. I'm a big believer in people taking personal responsibility. So when you're dealing with an agent, making sure that you believe what they say is what's going to happen, and they're going to answer their phone when things don't go as planned. I know that there are going to be times when I have clients who are just really not happy with the way things are going, but I really have I have a firm belief that a lot of the issues that come up are communications and maybe mismet expectations. someone who's going to lay out the expectations for you, someone who's going to walk through those coverages for you, and someone who's going to continually review that. Someone who cares about you and your family more than just a transaction is going to be important. That's what I look for in an agent. There are people who really don't see value in that, and that's totally fine. There's going to be people who want to really do a lot of homework and go and just find their own policies. That's totally fine. But it's a lot of time and it's a lot of work that goes into it. If you see the value of having an agent that you're working with to make sure that they're going to guide you through that process and have a professional that's going to be there for you when you need, and so you can have peace of mind instead of actually a big piece of homework that you have to do, that's where it's going to be a good fit.
Great. So last question for you. Where do you see the insurance industry in the next 5, 10, 15 years? What's coming on the horizon? What's going to be changing? And this is a general question, so feel free to answer it however you want.
Yeah, I think homeowners insurance, we're going to see small variations, but it's not going to be changing a whole lot. The auto insurance market will be turned on its head probably in the next 15, 20 years. And that will really change the landscape of how many agents are out there and the types of business that they do. The moment a car drives itself, you don't have responsibility for that, right? Like that actually goes to the manufacturer. If the computer was driving and the computer got in an accident, then it's the computer's fault. Maybe Ford's going to have to pay that policy, right? Like that's you as an individual would just be like riding in a taxi cab. You don't have to have insurance to ride in a taxi cab. So they think, right now the estimate is more and more people will move to it. And what will happen is as insurance is designed and it's cheap when there's a lot of people involved. So as there are fewer drivers, right, that are in the pool, the rates will continue to go up. Well, as rates go up, it'll actually make self-driving cars look comparatively less expensive. So I think it will be something that shifts fairly quickly, because as we lose drivers to that pool, more drivers will end up driving, and it'll just continue to cycle through. And it's going to be a tough go for auto rates now. I think auto rates right now are on the rise across the entire country. We know distracted driving is awful. So for these next few years, everyone getting a firm grip on what it looks like to drive with portable little awesome devices that give us access to anything we want at any moment, finding a way to use that responsibly and not start hitting each other is going to be a challenge. Or we're going to decide we really are going to keep using these, and I would rather have a car that drives itself so I can keep using them. So one of those two things is really going to happen over these next several years. So it'll be really interesting to see. But finding an agent that has a good that at least talk to you about that. Some agents really shy away from the idea that things are going to get more expensive, but it's the way it's going to be. So
interesting. Cool. Thank you. I really appreciate it.
Yeah, I do.